Thank you so much for your comments and questions. I'm really excited that you understand the importance of knowing your business numbers. Imagine being very comfortable with your business numbers and making decisions based on timely and accurate financial information that you can rely on. Well, this is very possible. Because if you're looking to develop your knowledge of key financial management strategies for your growing business, this is for you. You see, a lot of business owners are uncomfortable with numbers and do not make the effort to get to know their accounts. If this is you, I am sure that at the end of this program, you'll become very comfortable with your business numbers. This means your business will make more profit, you will increase your earnings, and live the life of your dreams. And I know this because I've always loved numbers and financial analysis from a very young age. I backed up that love with getting several chartered accountant qualifications in Nigeria, the US, and the UK. I've also worked with many growing businesses like yours as an accountant and business coach. The good news is you don't need to have a degree in accounting to understand your business finances. I promised in my last video that I'll answer some of the top questions. Now, I've answered a few of those questions in the previous video. So I encourage you to take some time and watch that video. I'm confident that you will gain some valuable financial information. Now, these three questions are equity versus debt, how to price right for retailers and service providers, understanding margins and break-even points for retailers. Well, this will also apply to other business owners. As you know, small businesses need money, and finding that money can be very challenging. There are two basic types of funding available to a growing entrepreneur: debt financing and equity financing. Debt financing is where you apply for a loan from a bank or an individual with the pledge to pay back at a given time and with some interest. Now, some advantages of debt financing. The lender has no control over your business. Once you pay back the loan, your relationship with the financier concerning the loan ends. The interest you pay is tax deductible, and that reduces your tax liability. It's easy to forecast debt financing and associated expenses because loan payments are mostly fixed and do not fluctuate. Disadvantages of debt financing. Debt is a bet on your future ability to pay back the loan. So if your business hits hard times or the economy experiences again a meltdown, you will still be expected to pay back this loan. Whether or not your cash flow has reduced or increased, the money must be paid back to the bank. Debt is an additional expense, and you have to pay expenses on a regular schedule. So this could put a damper on your company's ability to grow. The lender most likely will still require you to guarantee the loan with your family's financial assets. And so that has been a major challenge. What if you have no financial assets to back up the loan? Now, in equity financing, this involves investors. You could offer your shares of your company to family, friends, and other small investors. It also often involves venture capitalists or angel investors. Now, the big advantage of equity financing is that the investor takes all of the risk. If your company fails, you do not have to pay back the money. You will also have more cash available because there are no periodic loan payments. Finally, investors take a long-term view and understand that growing a business takes time. So there will not be pressure on having to pay some dividends out. Disadvantage of equity financing: you will have to give the investor a percentage of your company. You will have to share your profits, and you also have to consult with your new partners anytime you make major decisions affecting the company. And really, the only way to remove investors is to buy them out, and that is likely to be more expensive than the money they originally gave you. So which is good for you? It really depends. It depends on your type of business. It depends on your financial assets that you have. We will spend a bit more time in the workshop actually going over this. I do know of several businesses who have done extremely well using equity financing. I also know several who have done very well on debt financing. I also know vice versa. So we'll spend more time in the workshop to actually look at the pros and the cons and the different types of businesses that each of these will be better suited. The second question is how to price right. One of the secrets to business success is pricing your products and services properly. If you price your products correctly, that can enhance how much you sell, creating the foundation for a business that will prosper. If you get your pricing strategy wrong, you may create problems that your business may never be able to overcome. So it's actually part art and part science. There's several factors to consider when pricing your products. You have to know your customer. Price sensitivity. How price sensitive is your customer? You have to know all your full costs. The variable cost, which is the cost of purchasing the item for resale, or cost of producing, or even the cost of delivering the service. Your fixed overheads, which will include fixed salaries, your rent, your overheads, like your admin expenses, your utility bills. So all of these costs must be taken into account. Knowing your revenue target. How much do you plan to make? How many products or services do you have? You would then need to allocate this revenue target to the different products or services that you sell. Knowing your competition. What's your competition charging for similar products? And using it as a benchmark. And I'm not saying you should always go below the competition. It helps to know what they're selling, because really by delivering additional value, you can justify higher pricing. But it's always good to know what your competition is selling at. Also, knowing where your market is headed. What's the direction? Are there higher prices? Is it falling prices based on the maturity of the market? Now, break-even analysis and margins. The break-even point is the point at which income and expenses are exactly equal. The business has not made a profit or a loss, but you have recovered all your business expenses. Another way to look at it is that at the break-even point, each unit you have sold has paid for itself, which is the variable costs, and also contributed a share towards the total operating expenses, which are fixed costs or your overheads for the period. The break-even analysis is critical for any business owner because you will know exactly when you begin to make a profit. The break-even point is the lowest limit when determining profit margins. By knowing this break-even point, you can then know how much margins to add, and you also know how low a price you can offer, and also the effects of discounting on your net profits. You can calculate the break-even for any period of time. You just make sure that all the three estimates relate to the same time period. Now, I don't have so much time to cover this as much as I would have wanted to, but at the workshop, I will delve deeper into this. I have designed a comprehensive program that will enable you to really know your numbers and also other financial management strategies. This program consists of an intensive full-day workshop which sets the necessary foundation. You build upon strong foundations with an optional but strongly recommended 5-week or 10-week weekly master classes and coaching to enable you to apply the concepts you will have learned in the workshop, as well as other concepts, and see the improving results in your business. There will also be an online closed community that will enable you to interact with other like-minded growing entrepreneurs and give you the opportunity to answer all your questions. This program will be held once this year in Lagos this month, and with very limited spaces. My very first program was almost sold out with only 2 seats left. I therefore expect this program to fill out very quickly, particularly as we're covering financial management strategies, which is vital to your business success. I will send you full details of the program in my next email, so be on the lookout for it. Until then, here's what I want you to do. Let me know if what I covered in this video, and even also the previous one, was useful by leaving a comment in the space below. I would also like to know if it was not useful to you. That would be good learning for me. Thanks again for taking time to watch my video. Take care and bye. See you soon.